All right. Good morning, everybody. I'm just going to get confirmation that the stream's up and rolling. It looks like it is. Good morning, Paul. Good morning, James. It's kind of a quiet Friday so far. Bitcoin's trying to bounce. Markets, you can see in pre here, well, at least part of it. I just realized the heat map doesn't show up too well just because it automatically resizes, so I can't scroll. I got my little Bitcoin window in the way. But it's kind of muted. Tesla's down 0.44% in the morning. Nothing really going on too much right now. We do have economic data. It's probably going to be light. I'll probably be more willing today to look at tickers and stocks and do some evaluation than I normally would, just because it's a light day. Any news events and things that I don't have, you guys feel free to bring them up. But all we have today is goods trade balance. We have retail inventories, ex autos, wholesale inventories, a bunch of stock related information in regard to gasoline, crude, natural gas, etc. But again, just a super light calendar. Not really anything to speak of. Let's just hop over here real quick. So we do still see, I wanted to say on the S&P here too, we do need to see a bounce in the morning, guys. Dude, TLT calls for 2026 have insanely high returns. Yeah, but I'd go out further. When you're looking at the TLT stuff, guys, and again, I need to make sure that we get a standalone video. I didn't check Discord to see if anything had been created. If it hasn't, I'll try and do that myself this weekend here. And also get one out for Michael Howell in regard to his, almost 2-hour conversation. But I did want to say over here, so but go out. I would go out till 2027 because bonds don't move as quickly. You want to give yourself as much time to be right as possible. You don't want to go too high of a target. Again, I think that 100 to 120 that Barack was bringing up yesterday is probably the better target. And then I think give yourself at least 2 years for that to come to fruition. But I like anything that gives me a potential of a 5x return if people are worried about markets and they're trying to solidify longer term yields from the bond market. And again, the caveat is that they need to trust that the U.S. government's going to be able to repay their debts. And I think that's where that could actually be a good transition with Q1, Q2. If you're making a bunch of money off of Bitcoin, crypto, and just other things, if we have some kind of melt up scenario, and you think that the government's doing good, and you can see that Doge is able to take action and make things happen, that's where I think that it would be a good thing to step into, because you could actually see that starting to go up before any kind of scary thing might happen in 2026 because of global liquidity. And again, that might not even happen if we get enough of an increase in productivity and people are excited and companies are spending and CapEx is still there. But that's going to take a lot for that to happen. But yeah, again, over here on the S&P, I just wanted to point out we got a nice sturdy bounce, and then yesterday we just kind of tabled off a little bit. But we really need to get over this volume peak and turn it into support. So getting above like 6,050, really 60, maybe almost, yeah, right up here, probably like 60, and turning that into support is going to be crucial if we want to see more continuation from this. And not potentially roll over. So that'll be a key thing to watch today. And again, Bitcoin trying to bounce. I'll pull it up on the big screen here. I do have it down on the little tall screen or little tiny screen down over there. But it's at 96,477. Again, trying to bounce. I don't like this setup though. I don't like the way it's hovering over the 50 moving average. I think it wants to roll over. I'd be stoked for all of this to just take a breather for a day, roll over, flush out Bitcoin, and that way it can start its continuation back up, especially if it rolls over now, because Michael Saylor is buying Bitcoin come Monday, come hell or high water. That's what he does. So it would be nice to see this have some doubt over the weekend here, and then have him pick up and start buying. That's kind of what I'm hoping for. Oh, let me look at chat here. I got to pull up the full chat too here, down in my little restream window here. But again, pretty light on other stuff. The CNN Fear and Greed Index, again, I showed you a chart a while ago that said, hey, historically, that was the time to buy when we were down in extreme fear at 21. And so far, that's the plan at least, yeah. And what did you say? TA on Tesla got 400 stocks that I won't let go for a couple 100 years, or 400 shares. Yeah. Tesla's going to be a good one, man. Tesla's going to be a real good one. But again, that was kind of a buy zone, and I think I had that under here. where we had marked, let me just go over here. And so we're kind of fighting counter narratives. One is a slowdown in global liquidity. One is, all these, there's bearish divergences on the RSI for the S&P and for a bunch of other sectors where this thing wants to roll over. Again, Bitcoin, it wants to roll over, but then also we had a nice little bounce off this level. Doesn't mean we can't come down even lower though and have one final flush out before we go higher. But I will say this. So again, I'm sitting at about 9% cash, something like that, maybe almost 10%. But you guys have to remember too, it's probably actually 9, but a huge portion of that, about $250,000, is earmarked for paying bills. So really, I'm probably sitting it on about 5% cash, maybe a little bit less. So it's not an astronomical amount. So I know there's some people, if you're looking at me for a buy signal, first off, use a lot of other metrics too. But I'm not hugely, if you take out the money I was going to use to pay bills as well, I don't have a ton of cash, guys. So it's not like I'm super bearish. I'm just trying to use the TA and the macro and everything I know to see if I can squeeze out a little more of a return. It could end up being the wrong decision. I do think it'll be right, but it could be wrong. So I just want to caution people and make sure you understand that. OpenAI announces official plans to change into a for-profit company. That's going to be interesting to see with Tesla trying to sue them. Why didn't he do that way before the funding rounds? I don't get it. Such a strange company. I don't know why anybody, I don't know. Microsoft and Apple are both leaning into OpenAI. I don't know why. I don't trust that company at all. I don't trust a company where all the top executives are leaving. I don't. I can just tell you from my own personal history. So again, I don't know. To me, this looks like a further drop. It looks like a measured move where we try and go underneath the .618. We've touched it so many times already. There's kind of a rule in TA, guys. And we'll pull up Tesla here in a second. It's kind of a rule in TA where when you touch a zone over and over and over again, it just increases the likelihood that you're going to end up breaking through it. And I think that same one is applying here for Bitcoin right now. So we'll see if I'm right. And MicroStrategy here, I'll just pull it up real quick. Right over here. You can kind of see too, to me, this looks like a bearish pennant. Could be wrong. It's trying to creep up. If it can break this line, the problem is even if it can break this line and get up to here, up to this gap fill around 361 or whatever up here, then it just looks like a bear flag. You actually want this thing to grind down. You want it to test this 50 moving average and go underneath of it and do something like this and then curl around. Normally that's what you want to see. And so I don't think we're getting that. I don't think we're getting it. I think people want it. I don't think we're getting it. Curious on your TA and Sol. Yeah, let's do this. Let's jump over to Tesla since somebody asked for that first. And then we'll jump into news stuff too. The news is pretty quiet. If you guys have any major news with Bitcoin, there's a few different things. Japan, the prime minister indicated that they are not interested in doing a reserve. But I got conflicting stories on that. It sounds like they might just not be interested on it because there isn't clear indication of the path forward with it. If the U.S. is going to be using it as a strategic reserve, etc. But if we look over here for Tesla, we're down 0.76 in the morning. Again, this is what I want to see on a technical pattern like this. Again, we want to see some kind of grind. We got a nice fib level sitting underneath of us. This thing could come down, and if it tightens here and then goes back up, then it comes back down again. It'll look like a pattern that's going to break out and continue. Which is great. So I like still what I'm seeing with Tesla. It could take a breather for a day or two, and that is perfectly okay. But I like what I'm seeing with Tesla. And again, the measured, it looks like here, our next fib level, I don't even know why I have this drawn. This might just be an artifact from before. But we have about 31%, 32% up to the next fib, which is around $600. I would lighten probably out of calls. The calls that I have right now, I'd probably get out of a decent chunk of those once we got to 600. And then, because again, they've got that 2x multiple. And then I would be looking at, just holding the stock and using it, as a source of funds. If things get weird or something, I can end up taking some of that out. I just think that Tesla's, it's right in front of a parabolic move. But let's take a look here. Let's look at, so downside, you don't have a lot. I mean, it could drop theoretically down to 400. I guess that's, a 10% move, but I don't know. I don't think it ends up going that far. We'll see if it does. Let's go to Sol. If you guys have other tickers too, or anything you want me to look at the finances on, throw it out. And we have the economic data coming in 20 minutes. But again, it's so light, I just don't think anybody cares. Everybody's enjoying their weekend. Solana. So here's the thing I don't like about Solana. There's this long-term trend line, and it's underneath of it. So you want to see it break back above that and turn it into support. I will say this, though. It is finding it on the 100 daily moving average. So again, is there potential for us to roll over? If Bitcoin rolls over, this is rolling over, and I could see us getting to the 168 range. That would be a solid buy to me. Crypto's been beat up for a while. So I could definitely see it turn around and start to come up. But it's still underneath this. We really need to get above like 196, where you have that long-term downward trend line before it goes higher. And Solana just has this retarded looking cup and handle that we're back testing. And it's such a huge cup and handle. It doesn't even make sense. If you tried to find a measured move on this thing, it is just, even conservatively, astronomically high. It's a 10x. And maybe if it eats Ethereum, then you could see that kind of move coming. I don't know, though. It's such a long time frame that I don't know if it's going to play out. But yeah, man, this thing, I can tell you what, if it got to 1,300, I'd probably sell it. I'd sell it and take my profits because I'd be sitting pretty good at that level. All right, let's see what else we got here. Hood. Yeah, we could do that. And Cleanspark, I think, is right before it. So let's go to Cleanspark. So again, Cleanspark is all dependent on what happens with Bitcoin. It looks like we're getting a little bit of selling in the end of the morning, guys. If we look right over here, Tesla's down about 0.7 now. Amazon's down 0.5. You're seeing a little more red than we saw earlier. Cooler. Yeah, we could look at that. Actually, I'll look at that first. This is one of them. Yeah, I don't know if it's going to keep going up, but it's already went parabolic. I wouldn't step in front of it. That's for sure. Let me just do this. Since this is one that's doing a Bitcoin strategic reserve type thing. I don't know what their premium is. Do you know what their premium is? Do you know what their premium to NAV is? I know it for a bunch of others. I know Mara has one of the best last I checked. But I don't know what the premium for Cooler is, because this is a company that's buying Bitcoin too. I think they bought 20 million yesterday. Is that right? But this is just fucking ridiculous. I'm sorry. It was up 40% yesterday, 10% in pre-market. People are definitely pumping. Somebody asked a question yesterday. They're like, hey, are the miners getting their thunder stolen by all these Bitcoin strategic reserves? Yeah, kind of. For the small cap ones, they kind of are. But the weird thing is you also have miners like Mara that are buying way more than these, and people are pumping this shit. So I don't know. But this thing is up. Just be cautious with these kind of companies, guys. I can't even tell you what the NAV is on this thing. In October of 2023, so about a year ago, guys. No, I'm sorry, less than a year ago, this thing was at 10 cents. It is up 5,000%. I wouldn't encourage anybody to buy this at all. At all. This is just a great way to get wrecked. And I don't even know what their Bitcoin holdings are, but they're not 1 billion. And let's just look at the finances on this thing. Let's see, where are we at? Where my options profit calculator? There we go. Or not that one. Sorry, visual stocks. Let's look and see if I can even find these guys. They're so tiny. I don't know. Is it KULR? Yeah, there we go. Sorry, I got to look at this one first. So they make absolutely no money. Cash flow is negative. Their cash flow for last quarter, it says, was negative 3.4 million. And they brought in 3.2. This is just a horrible investment. And yet it's up 5,000% in a year. So, what is it great if you just happen to work for this company? Imagine if you work for this company, you are going to be very happy to sell the stock to any fool who buys it. So I again, you just tipped me $2 for this, Adam Ski. I don't want to shit on something, but I'm sorry. Anything that's up 5,000% that has no real fundamental valuation for that increase outside of we bought Bitcoin. This you know what this reminds me of? It reminds me of, was it last cycle? I think it was last cycle. Um, Maybe no, it was the one before. It was back in the day. I remember Kodak renamed them, like they turned themselves into like a Bitcoin mining, like they gave themselves some kind of, they did a name change, and it's just like it's one of those things where the name change gave them a boost in their stock price. It's the new Hawk Tuah. Yeah, it seems like it, right? Like just this just looks painful as fuck, dude. Imagine what happens. This thing's up 5,000%. Imagine what happens if it just goes down to peak volume. You've lost 83% of your money. And again, this is based, there's no fundamentals whatsoever behind this company outside of the fact that they bought Bitcoin. Did they buy enough to warrant a $1 billion valuation? I don't think so. They only bought 20 million yesterday. This is a pump and dump. That's all I can say. This is a pump and dump. And I wouldn't hold it for long, man. If you made a bunch of money off of it, don't be fucking greedy. Don't be greedy. I would much rather own Cleanspark, personally, right now. I mean, I would have rather owned that before, to be clear. But I'd rather own Cleanspark here. Yeah, so Cleanspark, again, we looked at this one yesterday. I think we're in a like huge bullish pennant. This thing could come down. If Bitcoin drops, you got a volume shelf right over here. And again, we got some volume above us on multiple levels, and it's growing. And so if this thing drops, we probably have support like in the nines, especially when we get down to this pennant level. It just doesn't make any sense for it to go lower. If it gets to that level, guys, it's already dropped 67% from its high in March. If it gets down to that level, it'll still be down 62. This is a great area for it to bounce. And just to get back up to the previous high, if we just clean this up here, just in March, just the March high, it's 140% increase in the price. So I would much rather own something like this that has the opportunity to go a lot higher than I would something that's went up 5,000% in less than a year. So Cleanspark looks good. I mean, you got a lot less threat. We closed the gap over here. You got a lot less threat of this thing going down than its upside potential, in my opinion. So if we continue to see some drops, I don't even know. I should look and see what did Cleanspark do yesterday for its drop? I didn't even look. Let me go over here. I might pull this up on the big screen, and then we'll look at other stocks too. And again, about 13 minutes until we see more data. But Cleanspark, it looks like. Cleanspark, I can't tell where the options were down yesterday too. Looks like 10% maybe across the board. So Cleanspark options have really been crushed. So it'll be interesting to see where they go. Often92, thank you for joining. Lucas, what's your thoughts on USDT being delisted in EU December 30th under MiCA law? I don't really have any. The EU is so backwards. Most of it, the European Union seems like it's turning into a third world country. So I don't have too much in regard to that. And I don't know enough about the MiCA law. I don't know if you have additional information you want to throw out to the group here, but I don't know that it matters. USDT, again, it's as long as they have the big thing that people care about in the United States is that they're using the dollar as a reserve, and that they can show that they're buying, our treasuries, and that's all we care about. And I'm sure they're going to be more closely audited. And it sounds like the administration, at least some investors, like they've got some affiliation with Tether. And so I don't know. I don't think that's a big deal at all, in my opinion, at all. So I'm just looking at yesterday here. So the big losers in the portfolio were Cleanspark, and then it looks like ArcG and Tesla. Outside of that, everything did okay. DLO showed losses, but DLO, I mean, that thing's practically toast. All right, let me keep going. Hood. Pull up Hood here. Sorry, I didn't have a better answer for you for your $10 there, Lucas. All right, so Hood actually looks good. This is a strong base. Hood is coming out with news all the time. I saw something about I don't remember if it was from Amit or somebody else, but something about a December 31st thing that they're going to be doing. And I know Amit had another one. Let me see real quickly if I have it bookmarked. Let's see here. Oh yeah, Hood. Robinhood silently rolling out their buy now, pay later program. Select Robinhood Gold users are getting it rolled out silently. So you have so many things coming out with Robinhood right now. I don't know. I would find it hard for this stock not to do well. It already had its bounce off of this fib level. It wants to break out above the one. It's like right now it's looking to do its parabolic move, just like Palantir did. So the next parabolic move is like a doubling, and it's getting really close to their previous all-time high. The way the parabolic move lines up is a little bit different than Palantir, but I don't know. I think it's a really easy bet to double your money on Hood right now. I don't think this is a good looking chart. It just needs to break up above 44. And again, it could drop back down and hit this fib level one more time. But if it did that, I would just be a buyer personally. Satoshi's Tulip, and I might buy more. I haven't actually. I stepped out of Hood a while ago. I've made almost 1,600% off of that in like the last 2+ years. It's been one of my biggest winners. Let's keep going here. Satoshi's Tulip. Strive Asset Management filed for a Bitcoin bond ETF. There's another one. Oh yeah, no, that's a good news event. Yeah, sorry. You're talking about the one with Vivek, right? Yeah. Let's go down here and find that real quick. There is an article, I think. Oh, no, I got to refresh maybe. 1 second here. If I can't find it, I could just Google it real quick because I know it's in here somewhere. Is this it? Malaysia's largest bank says when the U.S. Does the Bitcoin reserve, other countries will follow. Kind of a no-brainer. Oh, yeah, here we go. Strive. Vivek Ramaswamy's Strive Asset Management files for a Bitcoin bond ETF with the SEC. That is fascinating. We also have a small Swiss company, Relay, purchased another 13 Bitcoin for their balance sheet. Tiny amount, but still. And that's the article about Japan kind of rejecting the reserve. 6-week investment houses will launch imitative funds that will track Bitcoin. Let's see here. This is from Marty Party on Christmas. It says 6 Bitcoin mutual funds to debut in Israel. Oh, okay. We saw that one. Let me actually look up. I want to look up Strive and Vivek. I know I saw another post on that gave more detail. That's a good one though. Yeah. So this is interesting. So the fund aims to offer exposure to MicroStrategy's convertible bonds, among others. So this is fascinating and could be, again, just another booster for MicroStrategy and another way for them to be able to do it. Files for a Bitcoin bond ETF designed to give exposure to growing convertible market for companies with Bitcoin treasuries. So that's interesting. That sounds like rocket fuel when that thing is released. It sounds like people are going to invest the shit out of that. Personally, I think you could see a lot of money flowing into that. Kevin S. Hey, Jesse, can you take a look at ISSC? Looks ready to pop. I don't know what that is, so I'll hop over here first. And again, we got about 7 minutes, guys, until we get the economic data. We got an interesting, I don't know, it's probably just a bunch of anti-Trumpers, but there's a conversation about the Trump 2.0 economy and what to expect next year. I might jump over to that in a second. Let me just pull this one up real quick, just to see what this is from a financial standpoint before I pull a chart up. I always like to look at the financials first if I can. Looks like it's already started to pop. It's the 5-year. Revenue, 48% year over year. Profits, 10%. Forward PE is 16. What do they do? Aerospace and defense. Ooh, that's interesting. Cash and debt looks weird. It's very low levels. Not a lot of dilution. I mean, it's not a bad looking. It looks way better than Cooler from a financial standpoint. Revenue estimates look good. EPS looks good. What are the insiders doing? They're more buying than selling. They were selling in Q3 of 2023, but institutional ownership went down pretty heavily from the 2012, 2013 range. Short interest is non-existent, really. I mean, it looks like a lot of the metrics are going in the right direction. I want to hear this other conversation real quick, though, before I jump to any kind of chart thing. I want to listen to what these guys are saying about this economy. CNBC, a lot of the times, is just full of bullshit, but other times they have some good commentators on here. We'll see if these are fair. A lot of the times, all the commentators will be, when it comes to the Trump 2.0 economy, what they'll be is a stacked deck of people that are like, oh, it's not going to be good. That's what I saw yesterday. Let's listen here real quick, though. See if they're doing the same bullshit, or if they have any kind of evenly distributed take.
Welcome back to Squawk Box. Congress managing to avoid an end-of-the-year government shutdown, but a battle over the debt ceiling is still brewing.
Wow. Satoshi's Tulip said, Vivek Ramaswamy, Peter Thiel, J.D. Vance, Bill Ackman, and Howard Lutnick are all with Strive, affiliated with Strive. That's crazy.
Final bill to fund the government through mid-March included $100 billion for disaster aid and a one-year farm bill, but notably not the debt limit increase that President-elect Trump had called for. Join us right now on the spending and debt fights ahead next year. It's Michael Strain, Economic Policy Studies Director at the American Enterprise Institute, former Biden White House Office and Management and Budget official. Michael Linden is here. He is now Senior Policy Fellow with the Washington Center for Equitable Research. Take off the gloves, gentlemen, ahead of the new year here and help us understand where we could do the fight right now if you want. But I could say Michael and Michael. I almost have to give you your last names first. Strain, I'll go to you first. Lay it out and lay out your best argument for what you think should happen.
Look, I've been listening to the Democrats for years and years and years, correctly criticizing Republicans for trying to use the debt ceiling as leverage to force spending cuts during crisis situations when the nation is running up to default. President Trump offered disarmament. He said, let's suspend this thing for 2 years, let's suspend it for 4 years. Then later on, he said, let's eliminate it. This is exactly what Democrats have been wanting. It is in the best interest of the nation. If you care about long-term prosperity, if you care about the United States maintaining full faith and credit in our bond obligations, you should be in favor of suspending the debt ceiling. What the Democrats should have said is, President Trump, you want 4 years, how about 50? Let's suspend it for 50. And my guess is that President Trump would go along with that. Instead, Democrats seem to be...
I hear you. We can talk about the debt ceiling. I'm actually more curious, to be honest with you, about what you think comes after the debt ceiling debate, which is to say, what happens with taxes and what happens with this budget? You know, are we going to try to balance the budget? Are taxes going to go lower? Are we going to try to do some math that suggests that if you make the taxes lower, you're actually going to make more money, even though that has not historically been the case? What's the plan there?
Look, I suspect we're going to see the deficit increase as part of a tax package in 2025. That seems to be the plan. There are a bunch of Republicans up on Capitol Hill who really want a deficit-neutral tax package in 2025, and there are efforts to try and cut spending in order to offset any additional tax reduction. And that's going to be, a big part of what we're fighting about in 25. Where do I think it's going to end up? I suspect it's going to end up with the deficit increasing.
The other Michael.
Yes.
How concerned are you about? I imagine you don't want the tax policy to stay where it is. I assume you want it to go up. I don't know. Yep. And what do you think is going to happen here to the budget?
Yeah, I mean, listen, I agree with my colleague, the other Michael. What's going to happen is that Donald Trump is going to once again cut taxes, largely and disproportionately for wealthy people and corporations. That has actually historically been the main contributor, not Donald Trump by himself, but tax cuts disproportionately for rich people and corporations have been the main contributor.
You could also word that as small businesses and companies that hire employees.
To the increase in our fiscal risks over the last 25.
You got to remember, guys, you don't get low unemployment if companies don't have money to be able to spend on capital expenditures and on hiring and on growth. If you don't have growth, you have an economy that's faltering. You don't. The stupidest fucking thing you can do for an economy is to tax the shit out of it when you've got, basically growth slowing. You got unemployment creeping up just a little bit. You've got jobless claims staying out there for longer, highest levels in 3 years. You've got places like China looking like a disaster, Europe looking like a disaster. The last fucking thing you do is raise taxes so that corporations fire people and you create a death spiral. Ray Dalio would tell you this, okay? This is not something you do. This is the dumbest shit. There's no justification for what he's talking about doing, none whatsoever. You won't find an intelligent person that would agree with this approach. Let's see if he can justify it, though. Let's see if anybody asks him why we should tax more. Is it to balance the budget? Is that how?
5 years. People like to talk about the spending, but in fact, our spending has actually come in lower than expected from 20 years ago. We know that older people have started to retire, and that does push up costs.
Our spending has come down lower than we expected 20 years ago? On what planet? What the fuck is he even referencing?
But the really big problem that we've had in the budget for the last 25 years is we keep cutting taxes over and over again, mostly for...
The Democratic Party has had almost complete control of the United States government and the presidential office over the last 20 years, right? We've had Obama, we had Biden, and we had Trump for a brief amount of time in between that. So these guys have had almost complete control, and they're saying that's the problem. Fascinating.
For people at the top in corporations. And when you're in a big hole, you probably should stop digging. But unfortunately, I agree with Michael. What I think is going to happen is that Donald Trump and Republicans in Congress are going to cut taxes mostly for rich people and corporations, and we're going to end up with a larger deficit and more fiscal risks than we had when we started.
Strain, what do you think? You agree with that? And would you tell your Republican colleagues not to do it then?
I wouldn't characterize it that way. We have good evidence from the 2017 tax cuts, from President Trump's first tax cuts, that the business tax cuts increased investment, increased the wages of workers, increased the earnings of the working
Lowest black unemployment in history, like really, really great things happened.
class. So I disagree with the characterization.
Well, hold on.
And that's why all these small business owners and anybody who owned a business was voting for Trump.
Hold on, Michael. That's not true. We have good evidence that there was zero wage effect for the bottom 90% of workers. We have from...
You know what I hate about this shit? You know why I think CNBC's dead, guys? Outside of, like, again, watching this for Tom Lee and then just a few commentators that are really brilliant people, is they both say we have great evidence. Where's the fucking evidence? You know what I mean? On X, you can have an argument like this, and you'll get, like, charts, data, analytics, sourcing, and then you'll have community notes come in and be like, nope, it's bullshit because of this. On these platforms, you just have a bunch of talking heads saying we have good evidence. I just don't think that works in the world ahead. These kind of commentators, if you don't have the fucking evidence with you, if these guys can't source it quickly from X, because you could just ask Grok this shit and then pop it up on the screen. If you don't have stuff like this going forward, it's just you're not going to be around. Nobody will want to hear your opinion. I'm going to stick around just a little bit longer, though, to see how this finishes.
Actual data from the last 8 years, literally zero wage increase for the bottom 90% of workers. You're right that executives and the top 10% of workers got a big increase in their wages. And of course, they got more take-home profits.
And they got jobs. And if they work for great companies, they got stock-based compensation. And if they work for companies like Tesla, they got fucking rich.
They got to put money into buybacks, share buybacks, but literally zero.
Meraki, thanks for being a member.
Wage increase for the bottom.
Lyndon, what about the labor
workers.
market, though? Overall labor market. Let's take wage growth out of it.
Yeah. That's a totally fair question. Look, obviously, there's a lot of confounding variables with COVID, but if you look at just a couple of years right after the tax bill passed in 2017, but before COVID, there was no appreciable change in job growth, no appreciable change in wage growth.
Yeah, I can't listen to any of this shit. I'm sorry. Sorry for wasting your time. I just don't like it when people make statements that where we're not seeing charts and we're not seeing the data. This is just kind of worthless to me. Somebody said in chat, I missed it a second ago. I don't know who it was. Let me see here. Oh, Samo said, are you concerned about Cleanspark? I get Cleanspark and Mara were supposed to lag, but this is a bit much. No, I'm not, man. I'm pretty patient. Again, am I disappointed that miners have underperformed? Even something like MicroStrategy that I thought was the thing you should get out of earlier, and I did. I own calls at such low levels and leaps of all things, and I left a lot of money on the table with that. But Michael Saylor's strategy wasn't voiced as well back in the day, and I certainly didn't get that the convertible bond offering market would be like an unlimited supply of trillions of dollars worth of funds that he could tap. And I didn't know that, Vivek and these other guys would come in with this bond ETF company, Strive, in order to be able to try and provide more capital access to this area. But there's great things that have happened for that. But yeah, am I disappointed that miners haven't done better? Yes, I am. But am I worried about them? No, man. It just improves their technical setup, and I want that kind of stuff. Okay, I want that. I think that's good. All right. All spending on government does is also a tax on everyone. Yeah, I'm not sure if totally following the comment. All the spending government does is a tax. Well, yeah, they do spend money on that, right? Like we know that for sure with Elon Musk. We know they spend a lot of money attacking his companies, which isn't super great. MB, Jesse, can we talk China and Michael Howell, please? Particularly his thesis of the yuan having to devalue versus gold. We can do that more. I'm literally going to do that walkthrough of the video. So I think it's probably better conversation after I've done the video, and then we can reference some of that. But yeah, we can talk. And I do think, again, I think his thesis is that they're gonna have to devalue against the dollar, devalue against the yuan, and they're probably going to use devalue the yuan against the dollar or devalue it against gold, and they're probably going to do it against gold. We'll see if they end up doing that. I don't know what the ramifications would be on BTC price. I mean, I think BTC, no matter what, wins. And I do need to create, there's a new chart I want to add to the Discord. It is BTC against gold. That is something, maybe I'll pull that up real quick here and just do it right now while we're talking. Because I do want to have that chart. 1 second here. So let's do this. Bitcoin. You know what? I got to create a new one. What am I thinking here? 1 second. Make a copy. BTC. This is gold. I'll probably just use the underlying gold asset, not the ETF, because I don't think that's going to give me a lot of signal. Let's do Coinbase for now. Oh, my bad. And then just divide that by gold. Oh, no, not there. Can I do it in here? Can I do it in here? Oh, yeah. Divide. Let's see here. Gold. Yeah, okay, cool. Cool. All right, so let's just take a look here. All right, so this is actually kind of beautiful. I'll double check everything to make sure it looks good, but this is, and it used Bitstamp. I didn't want Bitstamp. Bitstamp's probably better. Bitstamp's got older information. That's probably better. We'll leave it. So this is a chart I'll add to the Discord too. But boy, does that look fascinating, guys? This is BTC beating gold over time, and look at it. So it's just consolidating here on the previous highs back in 2021, both in March and October. And then it looks like it wants to go out and break. This is like it's getting ready for its breakout period. So this is interesting. You can see how it's eating gold's lunch, guys, since it was invented It's eating gold's lunch. It actually looks kind of similar to the Bitcoin chart with some nuance, right? Like you wouldn't like Bitcoin obviously is much higher than it was during the 68 ish range, 69 range over here. So it doesn't show that in here. It's much tighter between it and gold. But again, you can just see how gold is a store of value, but gold is not a great store of value when compared to Bitcoin over time. It's actually kind of beautiful. Value Maxi said, can we have a BTC Tesla chart in Discord? We should do both, actually. One sec. Let me just share. Copy link. All right. And then I should do both. Let me just do this too. Make a copy. BTC Tesla. We should do both. And then I'll try and get caught up with some of those other comments too. Let me see. I'll leave it on Bitstamp here too, because again, I like that one. Here, and let me do this. Divide. And this is how you do some of these guys where you do comparisons. You just do them here in the search. All right, Tesla. All right, so Bitcoin versus Tesla. And I mean, Bitcoin wins with everything so far, like pretty much. But yeah, so let's look here. So it's much tighter, isn't it? Going back to 2018. So much tighter. So you can see how 2017 went up. And then look at this. Look at how much tighter this is with Tesla, guys. Isn't this just fascinating how tight this is going back to 2017, the correlation between Bitcoin and Tesla? We're kind of in the median point right here. And both of them are getting ready to launch. So it's going to be the correlation here between Bitcoin and Tesla is going to be a lot tighter. So you could basically tell that Tesla is a much better store of value than gold. And that will be even more so, I think, proven over time. Let's see here. We got people talking about convertible bonds too. Are there any catalysts for miners and Bitcoin stays at 100? Seems very undervalued now. Are there any catalysts if Bitcoin stays at 100? Well, I mean, it depends on the time frame you're talking about. I think that if we can get to like 120 by the end of the year, that's great for miners, because then their Q4 earnings will be able to report off of a price for their underlying commodity that's doubled. So you're definitely going to see miners' financials looking better going forward here with the mining. And if by some possibility we can get to like 150K in Q1, then you have an almost 3x or 200% increase from where they were mining at a couple of quarters earlier. So those are the catalysts, right? The catalyst is the price goes up, and all of a sudden financial experts start repricing. They start repricing these things, and they add in this price appreciation, and then the math looks really, really fucking good, whereas before it looked like shit. So that's going to be one of the big beneficial things. Let's see. Galaxy says, give me 100 knock. He says, thanks for everything you do for the community. Could you please do a quick TA on Rocket Lab? It broke out to a new all-time high yesterday. Of course it did. Yeah, we can look at that. Let me pull it up here real quick, and then I want to get back to a couple of other comments here too, real fast. I'll just pull it up, just the technical part. RKLB. Again, I don't love this one. I mean, at least these guys have successful launches. I love that. And yes, it did break out to an all-time high, but you got to realize on the RSI for this one, this is on the weekly time frame. This thing already hit 94. 94 is done. You're toast at 94. That's like the end of a cycle. And so you have a bearish divergence now that started on the weekly time frame from November 25th, a month ago, where this thing is going higher or just a little bit higher, but it's got the RSI trying to pull it down. The MACD is going to try and pull it down. There's so much that's going to try and pull this thing down. And you can't blame it, guys, because they might not be able to compete with SpaceX rockets, but their stock price was a rocket. This is just like, it just reminds me of all the meme stuff, except this is an actual company. But 714% increase from the low in April of 2024. Again, they're not a Bitcoin strategic reserve. company that went up 5,000%. So they definitely have that going for them. But let's just look at the financials on Rocket Lab and see how much money they're raking in. And they do have some new, I know fundamentally they have a new ship or something that's being built up. They do have a backlog that's something, right? They've got $1 billion in backlog work. Their revenues are going up. The problem is their cash flow isn't going up. So like the free cash flow last quarter was negative 42 million, and they only made 104 million in revenue. Their net income was one of the second worst in the history of the company, at least going back to 2020. They lost 52 million off of 104 million in revenue. So the company is in no way profitable. Their revenue estimates continue to climb, but they're not showing positive earnings yet. They're a rocket company, and being a rocket company is just horrifically hard. And all they do is sell. All the insiders are doing is just dumping their shares on people. And I can't blame them. So they're dumping millions of shares onto people every quarter as their stock price goes up. So I mean, these guys, the people who own this or work at this company, if you had stock options on this thing and you've made 700% so far this year, you're probably just dumping that shit all over people, willingly and very happily, because you're making a bunch of money. And you can go buy other things. You could buy Tesla. You could buy any other number of stocks. But they're doing a lot with R&D because they're a rocket company. They have to. But I mean, this isn't what I would like. This is not an area where I would invest in anything. Its next fib level is 34. And yeah, I don't know. It looks top. The technicals look toppy. And you can see, like, again, this volume peak over here is just huge, this blow-off volume peak. I don't know. It's not exciting to me, I can tell you that much. It doesn't look exciting. All right, we did pass some of our economic data. Let's see what it did. It's nothing too crazy. Goods trade balance was negative 102.86 billion, which is worse than consensus and forecast. Let's look here. Trade balance and advance, and so we're way down. Let's see, is this even? No, it's not. Is that a new level? Let me redo this here. So 102, nope, okay, so it's not that as bad. So again, our trade balance was worse. It's actually, if you look over here, it's kind of improved from this very, 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 horrific low, kind of the end of 2021, where the trade imbalance was the worst. I would expect this to continue to go up over this way, but so far, again, the trade imbalance is not getting a lot better. Most of that is with China. Retail inventories, ex autos, it says month over month, 0.6%. So we're building up a little bit, minus autos, we're building up inventories. It says retail inventories, excluding autos in the United States, by 0.6% month over month in November, following an upwardly revised 0.3% in the prior month. Advanced estimates showed retail inventories ex autos in the United States averaged 0.29% from 1992 to 2024, reaching an all-time high of 3.8% in December of 2021 and a record low in December of 2008. So when the markets were just falling apart and during the great financial crisis, inventories were very low. And right now, inventories have increased. I would actually say that a lot of that inventory increase is probably just, tariff-related concerns with a new Trump presidency, along with a trend that was revising higher. And again, the holiday season and all that stuff too. So nothing too scary to see there. Wholesale inventories month over month advance says negative 0.2% for wholesale, and they were expecting consensus of 0.2 and then of 0.1. So the wholesale inventories are a little bit lower than expected. Let's see what it says here. It says prior month, says after a revised 0.1% increase in a prior month and against market expectations of 0.2, according to advanced estimates, stocks of durable goods decreased by 0.5% following 0.1% fall in prior month, while non-durable good inventories rose by 2% after 0.3% increase. So I don't know if we're getting a lot of signal in either one of these data points. Again, they're very light today. Not a lot to speak of in regard to any of this stuff. Just kind of chilling. Let's see. Rumi says there's no way pension funds such will ever buy MicroStrategy convertibles. I took securities analysis in my MBA classes. MicroStrategy bond it won't even pass the smell test to actual institutions. Sorry to say. Here's the thing, though, man. If you have a fund and you're looking to take like a 1% or a 2% on something that a while ago gave it 90% returns in the year, and then the rest of your fund is pulling in 3% or 3 to 4, that 1% of risk that you're going to have that can greatly increase your potential returns for the year would be like a no-brainer. So pension funds don't have to buy it, but we know that there are pension funds that are buying Bitcoin related investments, just like we know, there's funds all around the world that are buying them and taking risk in it. And it's not even a risk if it's 1% of the portfolio. So I'm in school. I'm sorry. School is such an outdated concept of what's going to happen in the future. Listening to a bunch of fucking old investors talk about how we're never going to do this and we're never going to buy this. I got a master's in this. And then some of the people teaching you, all they are is just book smart. They've learned from other people from the past, and they don't even have like any real application to now. So I'm going to have to disagree with that, Rumi. And we know that there's been an endless amount of people that are companies that are willing to buy, in the bond side of things, I should say, that are willing to buy everything MicroStrategy has to sell, everything Mara has to sell, and then all these smaller companies. There's been no shortage of companies that are willing to pay 0% for the volatility, because it's just an awesome opportunity for them to make a huge yield. And so they're paying for the volatility. They're paying for the ups and the downs, and they're getting plenty of it. And again, they don't have to apply their entire portfolio to it. A 1% allocation would be enough to increase gains and make it look like they're outpacing all the other guys and doing a great job. So I'll disagree with that. I think that the market is telling us that there's plenty of investors that are willing to buy those convertible bonds, especially if they're stuck in the bond market and that's all they can fend with. And why else do you think Vivek and all these? Why else do you think Strive is doing this? It's because there is a market for it. It's not because there isn't. After January 21st, Wall Street brokers will offer BTC-linked notes, which compete with MSTR converts. The only issue now is SEC scrutiny. I used to sell these notes. They're a natural solution. Cool. MicroStrategy is not the right underlying for them to get exposure. Why? Why isn't it? Can you explain that? Let me know. I'll be awaiting your response. Oh, and also, yeah, and the SEC is obviously going to be a lot more friendly to Bitcoin everything. It's BTC. Okay. But why? Why? So again, explain your thesis behind why these BTC-linked notes, which will compete with MicroStrategy converts, will be the right solution, and that MicroStrategy isn't. Okay, but why is that better? Why is it better to structure BTC-linked notes directly? Again, the bond market benefits greatly from this because of the vol. The volatility is what makes this so juicy for them. Okay, well, that might be some, but what percentage of the market wants direct exposure to BTC and they don't want the multiple? Again, I don't know. I think there's a market for both of these guys. I think there's plenty of people that want that MicroStrategy exposure. You got to realize this company, if you understand what MicroStrategy is doing, then I think your argument is just null and void, well capitalized. It's null and void. And here's why. If you're diluting shareholder value, which they've talked about doing 31x versus what it is today, and then you're buying Bitcoin nonstop with that, and it's accretive, and you actually are increasing the amount of Bitcoin being held per share, that is going to give you much greater returns, and it's going to help put a floor in Bitcoin's price. Why wouldn't somebody want exposure to that? Again, I'm sorry. Like people's arguments about what's better and what isn't, we'll let the market decide it. Yeah, I disagree. We're going to disagree on that, well capitalized, but that's okay. Philippe, hey Jesse, what are your thoughts on Oklo? Dan Ives is super bullish. Yeah, let's pull it up. I saw a few of you guys asking for that. Yeah, again, everybody can get access to BTC exposure nowadays, but what MicroStrategy is doing is something different, and I highly encourage people to take a minute to realize why it's such a great multiplier, and why it can increase the stock price immensely and also enrich the bondholders. I think people need to spend more time understanding it and understanding why the market wants it so bad. Oklo. Wow, that's quite the bounce, huh? Seems like this thing's made a pretty decent move, even though this pattern does look bullish too. Kind of looks like a bull flag, right? Let's just look here real quick. So this is one Dan Ives is bullish on. I mean, it's already done really well, but yeah, again, this is not a horrible looking pattern from a technical level at all. I mean, it could be. It could be. I should say that. So it all depends on what happens here, because it could be this too. There's a massive amount of volume underneath of this thing. It would have to do like, I don't know. This is a weird one because you could make an argument where it's kind of like this. And so this is bull flaggy, right? It's kind of bull flaggy, but it's also not very different from this, which is that it's just tested down a couple of times. And this is not. This is like, if this tested down and got a little bit lower, then it's like, and then it bounced up real good again. But these bounces are so strong. So it makes me think that this thing's more likely just to keep going because of just the last 2 weeks are ridiculous. But let me look here real quickly. Let me see. So we were at 534 and we went up to 24. I want to check the financials on this one real quick. All right. Regulated electric. It's got 21% short interest. It's out of California. So an electric company out of California with 21% short interest. The financials look kind of insane, like they have no revenue and they're just diluting shareholders. They did add their bonds. They got 139 million in bonds. And then they got a decent amount of cash and bonds, but did they get that from you guys? I don't know. Without knowing the fundamentals of this company, man, I just can't speak to this because this is like look at their operating expenses versus their income. There is no income. I can't gauge things like this, guys. Do you guys know why Dan Ives likes this so much? Do you guys know why Dan Ives likes this? Because there's nothing for me to look at with this and to be able to value it. Now, if their fundamentals are amazing and they're doing like really great stuff, no income to like 30. Yeah. I don't know, man. I don't understand why people are investing. We are potentially either at the birth of a continuation of a new market, right? Where things go higher, but we are also could be at the end of a bull market in late stage. And it worries me more that we're going to have further drops in the market here soon when I see just all these companies that have no money whatsoever that people are just dumping in large amounts of capital to. And again, maybe this is something where the fundamentals are really great and I just don't know what they are, but I don't know how to gauge it. All right, BGZ, what's your thoughts on sailor put on BTC? Still going to have a normal BT? I don't know anymore, man. If you're talking about buying trillions of dollars of Bitcoin over the next like several years, I don't know anymore. I don't know anymore, BGZ. But I think it's going to be a good kind of problem because I think it's going to be one of those things where if anything, we're looking at a melt up in Bitcoin's price where it just can't go lower because this fucker keeps buying every Monday. You know what I mean? So, and I think it just, again, I don't know, you're making me want to buy back MicroStrategy, even though if 5% cash is not like the end of the world. If I have 4 or 5% after I pay my bills, that is not the end of the world. And I've still got like almost 800,000, I think, in MicroStrategy right now, but you're making me want to buy more. But if you're putting an endless bid under the stock, I don't know how you could be negative on it. It's insane. It doesn't even make sense because all it's going to do is just push the game theory forward. It's going to get everybody excited about Bitcoin. It's going to get everybody excited about MicroStrategy, and it just creates a flywheel of endless power to the upside. So I don't know that but I think the worst case scenario, what would happen is that would end up being, it would just end up doing too well. And that's the kind of problem you want to have. So if it ends up doing too well and you want to take some off the table, I love those kind of problems. I don't mind those kind of problems at all. Mike Lauk said, James Invest Answers started questioning the cycle because of Saylor. I know, I am too, man. Yeah. How do you listen to somebody who, again, everybody said that his company was going to go bankrupt last cycle. And he's like, fuckers, he goes, we could go to 3K. It doesn't matter. And he goes, I'll just sell my house. He's like, I'm a billionaire. I've got he's got 34,000 in personal Bitcoin. Worst case scenario, he could just liquidate all of that and still fucking pay the bills with MicroStrategy. There's all kinds of things this guy can do. So I don't know. Knowing his track record, even if Bitcoin drops today, like if we get that gap down today, guys, let me just pull it up here again because it looks like we are, I don't know, getting ready to roll over a little bit. Again, just kind of not getting much of an upthrust here at all, right? Like if we look here on the big screen, this doesn't look like a great bounce, does it? It looks like it wants to test lower. Now, don't get me wrong. It could test lower down to here, 91 or something, and then it could bounce again and get back up here. If it did that, I think we're pretty game on. I think it'll be one of those things where, okay, it's probably over, especially with Monday, knowing that by that time, we're probably going to see Saylor buy more over the weekend. But yeah, I don't know. It's hard not to believe that the cycle could actually be extended. Now, before, I took that with a grain of salt, but Michael Saylor's doubled down. He's not letting go. He's not letting go at all. So I think we could end up doing that. Let's see here real quick. Let me look. There's a bunch of comments. Jesse, could you have a look at AMD call leaps as a potential asymmetric bet? My math says yes, but I'm not as smart as you. I don't know if you're not as smart as me. We could take a look at it. So let's look firstly, and we got about 28 minutes until the bell tolls. Let's pull up AMD real quick here. Let's get a real quick view too on the heat map. So Tesla's down more, Amazon's down, Baba's down. It looks like China's stuff's starting to fall apart. Large caps are going down a little bit. So we are seeing some more redness right now in the markets. So I do think we'll end up rolling over today. I'll get my rollover and maybe a little buy-in. That'd be cool. Because again, I think Saylor's buying on Monday. I highly doubt he won't. He just keeps doing it, even if it's small amounts. It's varying amounts, but it's always buying. I do like the volume shelf still underneath of us for AMD. And targets. I mean, what could the targets be? The financials in AMD for what they're looking at going forward, I think are good. The only big risk I see is I don't know, and maybe you guys know more about this or you guys could do research. Maybe we can do this together because I only have so much time in the day. But if we look over here, revenue estimates look good. EPS looks great. And again, we know they're doing really good in the data center. That's like their key area of expertise where they're making all their money. If you look over here, data center revenue just keeps going up. Gaming is like and client revenue is okay, but gaming's just gotten not great at all. It's almost non-existent. And then embed is okay. Not really growth there either. It's really all in the data center that they're making money. I don't know how much that gets hurt by if China starts to have issues. I don't know. But the forward PE is 29. Not too far away from what Nvidia's is too. Nvidia's is a little bit higher, but I don't know. I don't know with these guys. The financials look okay. They've been beat up hard. It does seem like if we turn risk on, I think this is a good play. And from what I saw from their product line, I think they got a lot of good stuff that could do really well in the future. Let's look at the leaps, though. Let's look at the ones you're talking about and see how they're doing. Where is my options profit calculator? Do I even have it on here? I don't see it. I'll just pull it up. All right. There we go. December 2026 350s are more interesting for out further. Yeah, I wouldn't go too crazy high, but let's see where we're at. I like to keep things, I don't like to go too high, man. So I think what I would probably do, I think the 2026, like maybe even mid 2026, because again, we're supposed to have a global liquidity drop. This is why I don't like applying a lot of leverage right now. We're supposed to have a global liquidity drop. So like, I don't know, like 184, what is that for an increase? That's a 50% increase in a year. That's like a pretty big increase. If you did 2026s, betting out really far on these, like December, that's 2 years. Normally I love the leaps, but that's also into what's supposed to be a slowdown in global liquidity. So if you think about anything extra when you're picking targets on this, guys, think about that. Think about the fact that you're looking to be long and have leveraged exposure into what is supposed to be the start of a global liquidity slowdown after years of outperformance in markets. You know what I mean? Maybe think about that on your risk profile when you're thinking about this stuff. Now, again, we'll just keep it. I'm going to keep mine simple. I'm going to check the 180s to the 225s because I want to be more realistic on how much outperformance we see in a year or two. Because again, a 50 to 82% increase in a stock is a good number for a year or two. I just want to be clear. These are outsized for a reason, okay? So let's just say 185. Let's keep it small right now. And let's just do this. I'll do like 50 because again, I'm a bigger spender when I do stuff. So if I just do the 185 range and look at this, if it goes up a lot between now and like the end of next year, great. If it hits my 185 target, I'm looking at 100% return off of a 50. That's only 2x. Normally, outside of Cleanspark recently, I want at least a 3x on my return. So if this thing goes to 200, it gets better, right? If it went up to 200, then it's 160% out of 60. So if you think that, but again, look at the curve, guys. This curve is not what I love to see. So really, to get outperformance in here, you need to get above 200 to do well. And that's when the numbers are going to start to look better. So let's say it can get to its previous all-time high at 225, or it gets up even higher. So let's say it gets up here, right? This is going out to the end of October. Let's say it can get up to 300. So we'll adjust this meter and say that AMD is going to do really good and we can get to 300. And 300 is no small move. Well, I guess we can see it on the calculator here. We're talking about 140% increase from the existing price target. And this is if we're doing the December. So this is going out, gives us 2 years. This is assuming there's no economic issues around the world. This is assuming there's no war with China. China wanted to be ready for war by 2027. This is right around the wartime. And honestly, if they're telling you 2027, don't you think they'd want to go earlier? And so it's about a 3x. And if it happens earlier, it's about 4. Between 3 and 4x. So this is at the lower end of what I would look at for an asymmetric bet. Again, things like PayPal, where they can do like 5 to 10x, to me are a little more exciting. PayPal, any change in conviction? Not really. I'll invest. Not really. Oklo has Sam Altman on the board. Now I hate it even more. Thanks, Lance. Benedict Herwig. Jesse, could you take a look at AMD? Yeah, so that's January 2026 200s. My math says, yeah, so again, and we can look at the Januaries here real quick too. And what do we have? We got about 12 minutes until the market opens. And you said 200s is what you were looking at? And I'll just keep it at the 50. So let's say I got 41,000 in on this. And so, I mean, if they get to 200 by August of this next year, then this is not bad because you're getting a 250% return off of 63%. So you're getting a 4x, right? Like that's a little bit better. This is looking better. And if they go up a lot, because this is only out 1 year. Yeah, okay. Because this is only out 1 year, if they went up to like the higher end of these targets, then this is looking better. You're getting 5, 6, 7x. So if you're looking for an asymmetric bet, you're not applying too much capital to it, you're okay with losing it, then this doesn't look too bad if you have a shorter time frame on it. And again, we're not going back out past 2026. So if we get some kind of rebound where markets look better, and we get to just the previous all-time high at 226 for this company. And what did the financials look like back then? So this one I actually like a little bit better because I think the time frame lines up better with the potential risks that are out there. So I do like this one better. But again, I don't know if I love asymmetric right now. But let's just look here. So I'm trying to look at total revenues. So let's see. We had peak. Yeah, isn't it crazy? It's crazy to me. This is looking at the yearly. So 2022 was peak revenue, and then we had a decline. That's why this thing got crushed. It was the decline in revenues, the fact that we had accelerated. So people were really paying, a higher forward PE for AMD because the growth was ramping so much, and then it just got crushed. And so that's why we kind of went back down to earth. From going up really quickly like we did over here to 230. But could it do that again? Yeah, maybe. It could get to 187 to 230 by the end of the year, I think, pretty easily. And again, if we just look at the math, that's saying over here, right? But here's the thing. If it gets up to 187 over here and you made 220% off of a 50 move, I would get the fuck out of this. And if it got up to like the 200s, just previous all-time high, I would probably also get the fuck out. Because if you made 500% off of 82, you're doing pretty good. If you can get a 5x the underlying, I would get out. So if 40,000 got you 200,000 in gains, I would exit personally. Jesse, you use volume profile on the right to show the levels. How does that help you as long bases have a large volume shelf? And if it's rising, it's going to be a shorter shelf. Yeah, so you're just using it simply as support and resistance levels, and you can get an idea. A longer base is great because it gives you a ton of support. So if you see that financials, you need to combine all these things, guys, with the fundamentals and the financials too. If the fundamentals are looking good, if the macro setup is looking good, the fundamentals look good. Like when I picked Palantir, this is a great example. When I picked Palantir, much lower than it is today, it was pretty easy. It was pretty easy, right? Why was it easy? Because we were right over here, right? We're right over here. We had an inverse head and shoulders. The measured move put us up here, right? And so looking at this, we had a lot of volume down here. Looking at the company, the financials look good. You could look at the company and be like, well, this doesn't make any sense. This thing was at $44. It recently got as low as $6. It had dropped a massive amount, like 80%. And the volume shelf is looking good. We're over here now. We're holding on to it. So it's got a nice long base with a ton of volume underneath of it. All this stuff up here, this was looking a lot weaker in here. This was barely here. So back then, actually, maybe we can just do this way. Can you do this way? I think we can. If we just get it out of view, maybe we can get a better view of the volume shelf. Let me see. Does it work that way? Nah, it doesn't really. Let me see. If I go like this, maybe if I do like this. Kind of sucks because I almost need to move the volume shelf to the other side. Yeah, okay, so it looked like this, right? So we were finding support on the volume, and then you just had this huge gulf all the way up to like $17. So it looked really, really pretty as far as there's no real volume in here. If this thing does start to run, because it was so illiquid from its just, it went straight up here. straight down here. And then you got this nice, beautiful base with a ton of volume underneath of it. And then none of this was here. So you had this big gap all the way up to like the 17-ish range, right, where we started to get volumes over here again. It was just an easy bet to look at. But I also had to tie that in with the fundamentals. I had to tie that in with the macro. Global liquidity was expanding into the beginning of 2023 because I was listening to Michael Howell. And so I knew that there was an opportunity here between the macro, the fundamentals, and then also looking at the financials and seeing them continually improve. Looking at Palantir, it was very easy to be like, oh, hey, the financials look pretty good, and all these other stars are aligning. I should use leverage. I don't use leverage all the time, guys. There could be years where I don't use leverage. It just all depends. But again, when I was looking at this, did these look bad? Did this look bad? No. The only thing that was bad was they were negative net income, and that flipped, Q4 2022, and then they were positive again, and they were positive again. So let's look at Q4 2022 over here. Let's just get over here. So here's 2022. So I had over here, while this thing is down here, I could look at this and see that they were positive net income and that their revenues are increasing. Their forecasts keep getting better. And yet they were down over here. It was just a no-brainer. It was just like one of the fucking easiest bets you could have ever made. So you use volume. Volume in and of itself isn't the ticket. It's support and resistance levels tied with macro fundamentals, financials. It's the whole picture that really matters. Check new holdings. I can check. I haven't looked at the Brazilian real. We should probably look at that too. Because if the real's still crashing, I think a ton of business is tied in with it. I mean, it looks like it's still going down. I'd be surprised if we at least didn't test the 100 again. It doesn't have to, but this is pretty wicked. It's underneath this peak volume right here. There's kind of a gap going all the way down to like 9. It just seems like this could fall more, and I don't know. Let's check. We haven't looked at the dollar yet, guys. We should probably look at it. Let's look at it versus the Brazilian real here too. And then I can pull up new real quick and look at their financials. We got about 13 minutes until the bell tolls. But the dollar is still gaining against the Brazilian real, applying probably tons of pressure on this company and other Brazilian companies. And let's just look here real quick and see what did new have. I think we have a breakdown by region because of Alejandro here. Let's just look at new. That's by type, by region. Brazil. Look at this. Look at this. This is the problem with new right now, is their real is crashing. And so when you're looking at earnings and in regard to US dollars, they're plummeting. They're plummeting because everything's coming in as Brazilian real. And so, and look at their operating leverage here, their expenses base going up. So this is just the crash in the Brazilian real is having outsized effects on new, and I worry that it could have more if things really start to deteriorate. Let's look at the dollar. We haven't done it. So I don't know, man. I worry about this a little bit for these guys. So the dollar today is down 0.1%. Hopefully we get this crash here, because again, this is rising. We want to see us get back underneath of this on the weekly time frame. What we want to see in the market today is we want to see stocks doing well. We want to see the S&P. Let's just look over here at the heat map again. So it looks like it's getting redder, not greener. So that needs to change. It needs to get greener because we want to see Bitcoin popping good. Right now, it looks like it's getting, maybe even closer to a rollover. But we want to see Bitcoin popping if the markets are going to do good. We want to see the S&P getting above this hump at 60.50 and maybe getting to 60.60 so that we have a good support base underneath of here and with volume to go higher. Because if you look, there's a lot of volume there, guys. We don't want that to be turned into resistance, okay? So the S&P needs to get higher. The Bitcoin needs to creep up higher. And the dollar needs to weaken today more. We don't want to see it find a base and close above this previous resistance level. And for the first time, or I should say second week in a row, turn it into a base. That's just not as great. And let's look. I want to look at other stuff. How's gold doing today? Gold is dropping. So it's dropping. So that you would think this would be an opportunity for markets to go higher. Even though MicroStrategy now is only up 0.33%, and it was down almost 5% yesterday. So I'm still doing all right on that trade. Brazil has a fiscal crisis. Their government spending is spending like crazy. I believe it, Matinga. So I knew it's like off limits to me. I know there's other people like Data Driven and probably, I don't know what Tanner has to say, Invest Answers, because he loves that company. And I know he had a large position in it. I don't know if he's been keeping up with the macro or what. But again, this still worries me. Today we're seeing U.S. oil above 70 again. Looking like it wants to break out higher. That isn't great. We don't want to see that over the short term. Let's look at the MOVE index, the bond volatility index. About 11 minutes until market open, guys. So we got a bounce on this yesterday. Today it's down a little bit, but that's a pretty big wick. So again, we got a tweezer top up here that drove us down, and then we got the other side of the fence saying, nope, I want to go back up. So this is interesting. We'll see what happens with this. But if bond volatility ticks off and the VIX goes up, we should look at the VIX. So this is good, though. The 2-year actually backed off a little bit yesterday. So we're seeing some of the yields on the 2-year come down. Let me check the 10 and the inversion and all of that stuff. 1 second here. The 10 is up still. So the longer end of the curve is going up. That's just normalization, though. That's kind of what you want to see. You want to see the longer end of the curve go up, which means our inversion probably still looks pretty good. Let's go over here. So we're pretty uninverted. We're pretty uninverted. This is the time where markets normally fall apart, but I would call this a bullish steepening where the long end of the curve is going up the right way. So I don't know. This looks okay on this front, but let's just look. I want to see the other currencies. Other currencies. Wow. Look at how close we are to that. So this is where we had the Japanese yen carry trade unwinding is in the 160s. We're getting super close to that. This is levels that we haven't seen in the Japanese markets, guys, since outside of what we touched more recently with the Japanese yen carry trade unwind when everybody got scared, since 1990. 1990. It's a long time. So again, could we have another worry about currencies? This is my biggest concern, is a worry about currencies. And we're still applying pressure on the Chinese yuan. So all this stuff, it looks like currencies are still kind of in a sketchy place. Let's see if the rubles change. Oh, it's literally TLT, BGZ. It's TLT. It's what we talked about yesterday. Were you on the stream yesterday? It's TLT, and I already talked about it, so I'm just going to make a video. Wow, look at that, guys. That's a hell of a bounce against the ruble. Wow. So the ruble is under pressure again. So we see the Brazilian real. We probably see South Korea too under pressure. We see the yen, we see the won, we see the real, and we see the ruble all under pressure from the dollar wrecking ball. This is kind of the thesis of what I was talking about. This is kind of the thesis of what I was talking about the other day. I'm trying to think of how banking does in this environment. I still have about 50,000 in SoFi. But yeah, it's TLT, and I'll be dropping that separate video for it. TLT just looks great because and there's a caveat to it, right? BGZ, you want to ensure that TLT will only work if you believe that the government is going to repay its debts. That's it. Check the rupee, all bricks. The rupee. We can look at the rupee. Jumping in late, but FYI, Hims is one of Tom Lee's super grannies, a top pick. We can try and look at that for a second, too. Hey, Jesse, I apologize for my lateness today. No problem, Nobert. You don't got to be here on time, man. It's all good. Whatever works for you guys. You can always, I'm the person that's got to be here on time. Why not buy the 10-year? You could. I like, again, I don't know. I just like playing with the longer end, like the longest end of the curve, but you could do it on the 10 too. But I think TLT becomes attractive for people that are worried that for people that believe that the U.S. government can repay their debts again. And I think that would be an opportunity. The 10-year might be an okay one. Let's take a look. Thanks for input, Michael. Super fan for Hims. Let's see. I don't even know if I have the 10-year on here. I guess I do, right? No, yeah, I got this one. Yeah, yeah. I've just got the straight up 10-year. Is there a good vehicle for buying the 10-year besides TLT? I don't know what it is. Does anybody know off the top of their head? Let me see here. I'll make a copy. 10-year. Keeps going up even with cuts. Not much demand. Need China to buy them. China? I don't know if we need. We will probably have China buy them. But I don't think China needs to buy them. I actually think Michael Howell was talking about a defense bond and kind of forcing the hand of Europe and getting them to buy defense bonds if they want us to continue to be a part of NATO and just to avoid additional tariffs and all these other things. If they want us to play bond or play ball, they need to buy our bonds. And I actually think that that's actually a really, really brilliant idea. I'm going to skip on this 10-year thought. I'll think about the 10-year over the 20 and why that might be better. I don't know. I think the 20 will do just fine. Thanks, Tautilus. Bit of a bumpy ride, but believe in long-term case. Tariff negotiating. Yes, tariff negotiating. Tariff negotiating, and again, just if you want our military support for Europe, because again, we're part of NATO and we pay all the bills. A huge portion of them, way more than we should, right? For Europe, you'd think Europe would be able to handle itself right now, but we're paying a lot of that, and Europe's in a tough spot. And so, if anything, again, just forcing them to buy our bonds can drive down the longer end of the curve, whether it be the 10-year or the 20. It can draw down the longer end of the curve and make this thing roll over. And again, we want to see the dollar weaken. That would be beneficial for China. It would be beneficial for all these other countries around the world. Europe's defense spending is way down. I mean, not all of it, right? There's parts of Europe like Poland and others that have went up a bunch. Depends on what time frame we're talking about. IEF is the 7 to 10-year ETF. TLT for 20. IEF. Okay, thank you for that. Do we know what the volumes are on that? Let's go over here too. Let me see. Let me pull up TLT first. Let me do that first. Let's look at that. As Dane and I would love to see contributing more to defense. Yeah, I think, well, and here's the thing. You don't even have to contribute more to defense. Just buy our fucking defense bonds and draw down the long end of the curve. It benefits everybody. I'm sure, like, we don't want too strong of dollar dominance around the world. It will just fuck all these currencies that we just looked at. And you don't want that. Bell in 3 minutes. Yes. Maybe we should kill this for a second and go on to that. Volume 20 million, average volume 38 million. Make a copy. IEF 10-year, 7 to 10 year. 7 to 10 a year. I'm just going to make a copy of this real quick and pull this up, and then we'll get over to the bell. Yeah, the volume. I would say for volume. There's 6 million traded on this. And then there's 38 million on average on TLT. But I'll have to think about it more. I really meant Great Britain spending lol, not all Europe, Poland pumping money. Yeah, there's parts of Europe that are actually increasing their spending. I mean, Great Britain is a fucking disaster. Can we just all agree that Keir Starmer is a mess? Matthew Purdy, if Great Britain, we don't have half enough money to heat. Yeah, you guys are so fucked. It's like, let's bring in a bunch of illegal immigrants and then not even do anything to help the people who can't afford to live there right now. Can't even heat their fucking homes in the winter. You guys are just a mess. Yeah, 10-year mortgage rates will have to come down. 10-year mortgage rates will have to come down. Yeah, because the 10-year equals the mortgage rates you're putting. That's a valid point. Let's see here real quick. So we're coming up. We got 1 minute until the bell rings. We'll let that ring real quick first. And let's just look at that heat map super fast while we're waiting on that. So a much redder day today, guys. Much redder day. AVGO was red a little bit, or green a little bit ago. It's not now. I personally think the Santa Claus rally is canceled. I think the technicals show that. And MicroStrategy is only up 0.28% right now. It looks like Bitcoin is up 0.54. It looks like it's getting slammed too. What am I looking to buy? It's probably going to be MicroStrategy again. I might end up applying more capital. I have almost 600,000 in cash, but I wanted to keep at least $250,000 of that for other stuff. So I've got a little over 300,000 really to buy the dip, but I could devote a lot more.
All right, welcome back here. Look at that.
And I might buy,
CFO.
to be clear, if we do get further drops, if Cleanspark calls really just get crushed more, I've got about 300,000 in them right now. I might nibble on that just a little bit too, because they've been really, really hurt. But again, I put a total of 460,000 into those, so it's a decent amount of what my total portfolio is right now. It's about 8% that was in that, but right now it's worth a lot less. It's probably only worth about 5.5% of my portfolio, so it's not a lot right now.
Financial Officer Sarah, optimism is on the rise.
So the bell's ringing. I'm going to let the bell ring, and I'm going to pull up over here.
And CFO optimism, they're applauding the graphic.
It's a good graphic.
Applauding the opening bell.
I'm looking at it. So it's divergence from about their own company and about the economy, but they're getting more optimistic about the economy in particular.
I think let's just call it toward the end of the year. They're just more optimistic. There's people clapping. There's a bell ringing.
That was a cool looking chart. I'm going to go back 10 here. I want to see that. I do like that. I'm actually going to take a screenshot of that. So again, CFO optimism is just getting better and better and better all the time. And I think you could see where I don't know, that's a hell of a spike right here, and you can see the curve up. And so that it's nice that CFOs are optimistic because they're the big spenders, right? But let's look at markets. Is it good to be optimistic in the market today? The VIX is up almost 8%. Bonk is up 8.65. But again, I don't know that that's saying much. So we're seeing altcoins that were doing good, guys. That's kind of interesting. We got BitDeer. Oh, let's see. I'm going to wait and make sure that this thing's refreshed for all this too. MicroStrategy is now down almost 1%. So let me sort one more time here. So we got the VIX up. Bonk is starting. VIX is higher than Bonk now. BitDeer's up 6.42%. I don't know if there's any news on that. This was kind of doing all right yesterday too. We'll see if this refreshes. Optimism, Matic, Arbitrum, all Ethereum related stuff right now. That's up. Bitcoin's getting closer to 96, and it looks like it wants to roll over. Jesse, I know you don't like to talk shitcoins, but could you have a look at virtual? Maybe. It's such a small one. I don't know. I don't really want to go too deep down the shitcoin path. There's so much more important stuff, and that doesn't really pertain to a lot of people probably that are in here. So I might skip that for now, bro. We'll see, but I might skip it for now. All right, so let's just keep looking here. So again, Ethereum related stuff doing all right. Shitcoins doing all right. They're starting to drop though, I think. Yeah, BitDeer's already down to 5.4. U.S. oil, again, still up. Bitfarm's up 1.1% today. So again, some of the miners they want to be bouncy, guys. They seem to want to bounce. It's just the market isn't really giving them a lot of opportunity to. Shanghai local company index is only up 0.25%. Shanghai composite total return is up 0.07. Solana is up 0.1%. I don't know. It seems like things are starting to roll over. I'm gonna it's the strongest AI agents play. Okay. I'll make a note of it here. Maybe we can pull it up for a sec. I think the big notable thing is going to be us dropping lower. Let's look at MicroStrategy real quick here, guys. I'm going to pull that up. Yeah, I'll take a look at Unity. I saw you in there a few times. I think it's going to be a bloody day. I'm happy I took extra cash yesterday. So I got almost 600,000 to spend. I do have limit orders still in like the 280s. So, Value Maxi, your Ally account is a tax advantage, correct? A lot of them are, yeah. They're a tax advantage. They're Roths or IRAs. And then I've got money that I keep in long-term accounts too, where I don't really day trade it at all because I'm trying to do long-term capital gains to lower my tax obligation. Are you using some of your BITF sale to pay expenses, correct? So you're going to take a 10%. Yeah, I'll take a 10% this year. And then next year, I'm only going to pull out long-term hold accounts. So my tax obligation this year will be a little bit higher, but it'll be off a lot less money. And then next year, so yeah, I'll take a hit. My tax bill will probably be pretty hefty off those. Not something I would normally do. But next year, all I plan on cashing out or pulling out will be long-term accounts, and I'm hoping to have at least 1.5 to 3 million in those. And so I'll withdraw that, and I'll pay a long-term capital gains tax that will probably be something like a 17 or 18%. But yeah, I am taking a 10% hit. I'll pay that penalty right away, and then that'll roll up into my taxes for the rest of it because it'll count as income. Curious to understand cash expense management strategies. Let's put it this way. I used to do that value and it was a lot easier to do. This year that wasn't my plan, but I also didn't plan on making money. You guys have to remember last year, I didn't have revenue. I didn't have revenue for like 4 years. So I had no income. So when I was pulling out like $100,000 or $200,000, I was taking a 10% penalty on it. But my income was like non-existent. So the amount that I was paying in tax was probably lower than a lot of you guys pay, especially if like you're a doctor or something else making a lot of money. So my tax bill, I was just nibbling off a little bits of my account, and my tax bill wasn't actually that great, and I could use that money to survive off of. And then I rotate every once in a while, and I'll do like I sell my long-term holdings when I really think they're getting close to a peak, and or I've made just wicked returns off of them. And then in that year, I don't pull from any IRAs or anything else. But now I have income. I have a lot of income. So going forward, I really won't try and pull. And here's the thing. I would pull from your Roth IRA absolutely last if you need money. That's one of the greatest ones because John Davidson said 72T SEP on dedicated IRA to avoid 10%. Yeah, I've thought about that. I'm probably going to end up doing that. You basically just have to figure out what your set distribution would be in order to avoid a 10% penalty on it. I've thought about that. That's probably something I'll look at doing next year. I'm just a little too lazy this year, and I've got so much going on. Again, I didn't expect to have a YouTube channel. I didn't expect to have around 300% or $300,000 in annual reoccurring revenue. There's just a lot of things I didn't expect before. So I'll probably end up doing some kind of distribution maybe from it, or I'll just leave it alone. I don't even know that I need to do it anymore after this. Because with my long-term holdings and then with my cash that I have, I'll probably park the IRA and not touch it. And the Roth, definitely don't touch your Roth, guys, because it's after-tax money. You want to save that till the end because then you get to keep it all. So the Roth, you really leave the fuck alone. If you're desperate, you can pull from like an IRA, but I wouldn't do that with a Roth ever. I would just let that go. MSTR is down 2% now, guys. Let's just look at this. So again, this is not a bullish looking pattern. To me, this just looks like a continuation that's going to bring us down. Roman Z said, sold all my miners except for Cleanspark and MSTR. We'll concentrate on these two, kind of more focused that way. I kind of agree, man. I think miners are all going to have their day. It's just not today, right? It's not right now. So this thing right here, guys, the measured move kind of for what we could continue to see here is, again, it could go even further. It could go into the 260s. My stuff is right near the gap fill. I think around the 280 level is a pretty good one. Maybe a little bit higher if you want to be guaranteed to lock in. Because you got to remember too, guys, MicroStrategy, if you're looking to buy, you know that fucker is going to be buying a bunch over the weekend, and he's going to report that he bought Bitcoin on Monday. It's just whether the macro drives it down enough, really, more than anything. But I can see MicroStrategy can go lower. I think the market can go lower. I hate to go against Tom Lee because he's brilliant, right? But I worry more right now about global liquidity. I worry more about China monetizing their debt and actually getting money into the hands of the people. And so, Jesse, have you ever commented on the buy, borrow, die approach? SBLOCs would appreciate your perspective on these tools. I don't know. Buy, borrow, die. I don't know that I've ever used it. So I can't speak to it because it wasn't something I did before. So I'll look it up. I need to do proper research. I don't want to talk out my ass. Okay. Buy, borrow, die. I mean, here's the deal. I love the concept of never selling your stuff. So I probably need to look at that. So thank you, Eric X, for that. I'll take a look at it. I never had enough money before to be able to do stuff like that. But, once you hit I went over 7 million a week ago. I'm still probably, I don't know, close to 6, maybe a hair under 6 right now, just because markets got depressed. You do a distribution. I can't remember if it's monthly or yearly, Mauricio, but you could basically do a set distribution of your funds. Now, the thing is, you distribute no matter what, right? So it's one of those things where, if anything, I think you want to keep it as a smaller amount of money. If you want, you're trying to avoid the 10% fee. But what happens if you're doing that, the SEP 72T, into a bear market and you're locked in on this distribution? That should really be the time you're buying. So again, I don't know if I'll need it because I've got revenue now and I've got my long-term holdings that I'm hoping to cash out of this year and have, $1.5 to $3 million in. MicroStrategy down 2.5% right now. Bitcoin dropped well under 96. Let's look at that real quick here. Yeah. I'm glad I cashed out when I did, man. SoFi too taking a little bit of a hit today. I'm gonna I don't know. I think I'm gonna take some cash out of that too. I'm actually up on that play. I'm gonna probably just dump my SoFi today. I just think markets are rich and that we're due for some kind of drop. So I added another 48. So now I'm sitting at about 625,000 in capital. I wish it didn't happen, but I think MicroStrategy can close the gap. Yeah, I agree, Tautilus. That's why I was going a little light. I'd rather be right now with the 48 that I just took out in SoFi. I'm sitting at about, I don't know, probably 11% in cash right now, just with where the balance is, because the balance is going down. So technically my cash percentage is going up. But I'm definitely happy that I have some cash. I think that was the right move. After what's been a really great couple of years, it doesn't seem crazy to me to have the beginning of the year, especially with global liquidity that's been just crawling. And I'm going to pull that up again real quick. This is the chart, guys. And there's others like this that just show M2. This is the People's Bank of China. But there's a bunch of this, whether it's M2 across the world or the People's Bank of China not providing adequate, injections into their economy. You can see that, the price usually tries to track it. Like if you look here, PBOC, black, lots of liquidity. What happened? Liquidity's ramping. Price went up first. Or I should say this, the price went up first for the GDP momentum. And this isn't even the best chart. This is not this is GDP. I should be pulling up other stuff. Oh, this is not a bad one though. So the yield curve control and the quantitative easing, you can see how some of that has been going down since early 2024. So this is a good one. So again, we're seeing kind of this dropping down after what was juicing the markets. And so we can see the U.S. is kind of doing their part. Yeah, we got 2 cuts instead of 4. We got that too. And then again, I can pull up that other one. I'm not going to go into the devil's cross and the convexity and slope, but that's in regard to the bond market. You can see the bond yields on the 10-year just plummeting for China. This is not a good sign for China, guys. Their yields just plummeting off the base of the earth is not a good sign. And I don't know if he has a good M2-ish. Yeah, okay. MSI World Equities, latest versus average. So latest cycle versus average. So he's saying that sometimes world equities roll over. And then this is GLI. So this is the Global Liquid Index versus Bitcoin. And you can see how it dropped and Bitcoin, how well Bitcoin tracks to it. And again, this is kind of M2 is a simpler version of that, but these things make me worry. They make me worry, and I'd rather be a little bit cautious after doing really, really well. Tesla down 2.62%. Do you think we're in a bear market or falling just as... I think we're falling into Trump taking office. We had a wicked rally. We got global liquidity going down. I don't think we're anywhere close to a bear market. I think if anything, we're near a melt up, and the Santa rally has been canceled. So I think we're in a melt up. The problem is the melt up. Could the market go down for, and would it be healthy for the markets just to retrace and have like a momentary breather? I think it would. And so I could see, again, I could see Bitcoin going down, hitting the 80s or something, maybe even 70s, worst case. I could see MicroStrategy maybe going between 280s to 260s. I can see a lot of things happening over the short term, and I think it would be a healthy correction for markets to take a breather, because the Santa rally, or I should say the Trump rally, the Trump pump has been great. SAC says ARNT central banks going to print more money though. Yes, that's my point. Okay, so here's the point I've been trying to make. Everybody was consensus that the Santa rally was going to happen because everybody follows Tom Lee nowadays. So you could almost go counter to that. Then you look at, you look at money supply, and let's just jump over here. I think I still have this under U.S. economy. Maybe it's under Bitcoin. I don't know. Let me just see here real quick. I could just type it up. M2. So you have M2 money. There we go. So I'm sure somebody's got it. Joe Consorti or somebody's probably got it. M2 money supply chart is so wild. All right, let's see. That's not it. Here we go. Here's one of many, right? Everybody's got this. Everybody's got this chart. This is 10 weeks lagged. I don't know what the date on this one is. It's probably a little bit older. I wish they had it. Oh, no, this is close. So again, you could see Bitcoin starting to come down. So this is actually more updated. This is more updated. So again, you can see Bitcoin starting, or you can see the global M2 coming down. It leads by months. And then you can see how Bitcoin's starting to roll over. There's a 10-week lag that they put in here. So they moved this over 10 weeks so that they could get visual representation of how this stuff lines up. And it's not always perfect, but I mean, it seems to be playing out, doesn't it? Seems to be playing out pretty good. And I'll feel good being able to have some money and being able to buy the dip into this. Even TLT's down today, guys. Nothing really doing well today. ARKG is up 1%. What the actual fuck? That's weird. But yeah, so, and Cleanspark's down 2%. Their options are down 8.66. The options are just getting crushed. So I don't know, I like having cash in this kind of environment. I think this makes sense. And I think losing some, let's just look at the S&P. Let's look here real quick. Got a lot of charts up today. How's global liquidity trending down when central banks are about to print? So global liquidity. So the biggest countries on earth, the ones that really matter, are the United States and China, and they're not printing. And it doesn't matter if they print too. It's whether they monetize it that really fucking matters. They've got to monetize it. They've got to get it in people's hands to where they're spending it. Is the Fed doing that right now? Or I should say, remember the Treasury? The Treasury's trying to issue, they've got $8 trillion in debt that they need to refinance this year, or we have major problems. And they're issuing shorter dated treasuries, so they're issuing more in order to just keep the lights on. And they're not doing longer dated stuff. We've had this massive pump in markets, and after Trump gets elected, we've done really well. When was the election, guys? I don't remember off the top of my head. I'd have to go back and look. But just even look at how well we've done since August. The S&P was at 5,100, and then we got up here to 6,100. Just since August, guys. So is it crazy at all? It would be crazier if the stock market didn't take a pause. That would be the crazier thing. And the S&P, I mean, it could take a pause down to the 100. It could drop even underneath of that. It could go down to here. It could test the fib. It only kind of briefly tested it here. It could test it again. Actually, it's probably like here. This would be the healthier range. 5,700 would be a healthy range. Bounce off the 100 moving average and then continue higher. But let's just look here. Let's just look. Let's do a longer time frame. This chart is messy and has a lot in it, but we'll just take a look. So again, let's get rid of this percentage. So we've done really well here. So even just here, guys, look at when we got rejected off of this, what did we do? We dropped all the way down. So we dropped from 5,600 all the way down to 5,100, and then we bounced, right? That's not unhealthy in any ways. Look, even over here, this consolidation between July, November, I don't think we do anything like this. But I think, again, I think it's totally possible that we could drop down into the 5,700 range and then bounce and start to go higher. And it would not be perceived as unhealthy. It would look similar to this. It would look similar to this. And again, like this crazy wick that we had here, we've kind of, since September 3rd, look at the market. It just went straight up. Funny that M2 is the only thing that Milton Friedman wanted the Fed to manage. Jay Powell says he doesn't even monitor it. That's funny. That is funny. And there's how many employees in the Fed? Michael Rowland says, seems like IWM is outperforming SPY versus QQQ. Wonder if that continues during the overall pullback. Good question. Let's just take a look here. Let's take a look at, we should have more of these comparison tickers. I really love them. I need to do more of it. So the SPY is down 0.7%. Let's see how the NASDAQ's doing today. NASDAQ's down more. It's 1.21. I need to fix this chart. I need to move stuff over anyway. But again, you can see how it's trying to consolidate over here. And then the RUT. Let's see how the RUT's doing. The RUT's down 0.32. You're right. Small caps are outperforming. But again, they've had such underperformance for a long time. They're not even near all-time highs. Like we just touched them and went above them, and then we immediately dropped. So, and the all-time high for the Russell was in November of 2021. And if you just go back here and look at the NASDAQ and where it was, I'm just going to clean this up for now just to make it look simpler. So if we go back to 2021 on the NASDAQ, I mean, like over here, look at how much higher we are on the NASDAQ versus where we were in 2021. We're up 31%. And right now, the small caps are actually still down. They're down from that 2021 high right now. So it kind of makes sense that eventually they're going to get a bid, especially if we see the longer end of the curve on rates, like the 10-year, do better. Like, again, they're down 7.2%. So it's completely opposite direction. I do think it's healthy, though, to see small caps getting a bid. It tells me underlying that if it can hold this kind of stuff for days, weeks, that smaller businesses, or at least people that are becoming more optimistic of Tom Lee's thesis that smaller caps can underperform or overperform in the months ahead. How can we abolish the Fed? I mean, it sounds like it's doable with law. It sounds like it's doable. I mean, from what Vivek was talking about, different bodies of the government can be abolished. So I could see the Fed disappearing completely and utterly. All right, let's see. We're trying to bounce here. We'll see if we can. If we do bounce here too, like, I don't know. We'll see what the technicals look like. This is a great place for the NASDAQ to bounce. Right on the fib. Let me just scroll over here. Need to extend this out to get it to where this is like viewable again. Okay, there we go. I mean, this is a great place for the NASDAQ to bounce. Let's check. Let me update charts here. Let me go to the S&P. Yeah, how are chips doing? I got to see how chips are doing. I think I started to create a chips watch list. I got to do more of that. Critical to high-end semi and manufacturing like TSMC with a huge market share, about 90. Yeah, they're the lithography king, right? They're required for all the advanced chips. So, yeah, I don't know. We'll see what happens with the S&P. The S&P could kind of, again, it could just drop, it could drop more and then go back up, and still be in a healthy trend. If you look at this line here, it's like it's still following its trend line pretty good. It's been a pretty great move, honestly. If you go all the way down here to October of 2023, 4,100 all the way up to 6. That's like a 50% increase in a year and a half for the S&P. That's amazing. Michael Rowland, anyone curious about the Fed should read Stephen Mitford Goodson? Yeah, I've never read him. All right. Stephen Mitford. I'll read it. I'm always looking for a good book. Do you got a good summary at all? Is it just like the history of the Fed, or what does it encompass? All right, so the S&P, I don't know. The S&P could drop. The NASDAQ actually looks like it would love to find support here. It doesn't have to. And the Russell, I think the Russell looks better than all of them because it could grind down and then just springboard from a technical level. History of Central Banking and the Enslavement of Mankind. That sounds like a good read. And I also agree with the premise. Yeah, we'll see. Maybe we get a bounce today. I don't know. I think when I look at global liquidity, guys, it just makes me worry. All this stuff makes me worry. Just not M2 in its basic form, but it makes me think that we could see a breather. It doesn't have to go all the way down to here. Again, it could drop down to here, stop. Maybe liquidity starts turning up because again, we have talk about 411 billion in printing coming from China. The problem is that they're talking about doing a bunch of crazy shit and building more infrastructure. It's like they're still following the same playbook from 2008. They just forgot that they're one of the most indebted nations on earth. Not that Michael Howell cares about debt, but they forgot they're one of the most indebted nations on earth. They're seeing massive capital outflow. They're still threatening to invade Taiwan. The West is waking up to that a lot more than I ever thought they would years ago. So it's going to be interesting. Let's look at Bitcoin here. Bitcoin is under the 50 moving average again, trying to test down further. I don't know. I think the market ends up dragging down today, guys. That's my bet. We'll see what happens. I might buy a little more of the Cleanspark calls. I said I wasn't going to do that, but I mean, they're down 8.66%. They're just getting brutalized. I might just like put a little bit into them, just because I believe the miners are going to eventually start to bounce. We'll see what happens, but I just think some of this stuff is so cheap right now. It just seems crazy. So I'll probably just nibbly. As the price goes lower, I'll just buy maybe some little tiny bits while I wait to see if my microstrategy limit orders end up filling. But there isn't a lot to talk about, guys, on the economic front. I'm kind of spent. Jesse, are you aiming to buy Ethereum during the short term? No, I'm really not. I don't care about Ethereum. Again, just from all different spectrums, when I look at altcoins, I just see Solana taking the lead. I'm very much in James' camp with Solana, and it's because of him that I'm there. Let me see. Where's my altcoin stuff in here? Do I have it? Let's see. Altcoins. There we go. Again, I don't see the point in buying Ethereum when everything I'm looking at just shows Solana doing better. And again, $90 billion cap of Solana. What's the upside potential of that, considering they have, in just about every way, more activity on their chain? Daily transactions is a good indication of that, right? But they're just more active and greater utilization, lower fees, easier to work. The memes are going to want to be on there because, again, it's just cheaper. When Ethereum hit high traffic, everything was really expensive and people were just spending all their money on fees. Solana doesn't have that problem because of its simplicity. And so calls can be totally different than the underlying stock. Kyle said ARKG is up 1%, but the calls are down 7.7%. So this was the stuff I was talking about. Cleanspark has that same kind of problem, right? Well, I mean, it's down 1.6%, but the leaps are down 5%, it says right now. And so I think we're seeing a flush out of liquidity just like we saw in triple witching, just like we've been seeing for like almost a week. We've been seeing the leverage. We've been seeing people jump out of leverage, not jump into it. Like today, and let's see, how's Tesla doing? Tesla's down 3% on the day today, guys, and the leaps are down 5.32. So their leaps are actually outperforming because they should be about 2x. So they should be down 6%. So it seems like there's some bidding into that. But people aren't taking on a lot of risk right now. They're worried. I think they're scared of the market rolling over. MicroStrategy's getting a bounce, down 1% on the day. But yeah, so I'm not interested in Ethereum. Solana has a $90 billion market cap. Ethereum has a 400 billion. Or yeah. So why would you want something that's 5x the size, that already, just because of its size, and then the activity on the chain is getting less and less and less and less and less, and the narrative around like what is the point of Ethereum? I don't know. I just see limited upside versus Solana. Anyone curious about the food? Oh, it was you. All right, so we're near 9 o'clock. We don't have more economic data that matters. I think I might just call it, guys. We looked at a lot of charts. I know I didn't get through all of them. I know, and I apologize. I'll try and do more of this in the future. We didn't go over any news-related events. What did Proven B say? I'll call. I call work today and drink with you all day. Some post-Christmas cheers. I can't even drink with my stomach issues. I don't drink at all. Robert Torres, maybe the market is trying not to pay all the calls that were placed for the end of the year. Yeah, again, liquidity flushes like that. There's all kinds of stuff where you just kind of wipe them out, and unless there's a lot of money and buying power, I don't know. People have had some wicked gains. I think a lot of people were like, "Hey, I'm going to sell at the beginning of the year." What happened if people just said, "Nah, fuck that. We're doing it now"? Especially for people like me, right? Like if I do this, I did it in a tax advantaged account. I'll end up withdrawing the funds and paying tax. But until I withdraw the funds, I don't pay the tax. So I could actually close my positions early. So what if people that have a bunch of IRAs are closing their positions early? You ever think of that? Like that could be a decent amount of the sell pressure, and just, again, bigger funds that don't have to worry about certain things. Isn't it possible that many are tax loss harvesting? If they have it. Are there a lot of people tax loss harvesting Tesla, though? Probably not. NVIDIA? Probably not. Unless they were day trading and doing other stuff, they're probably in big gains. But yeah, that can be a thing too. River, thank you for becoming a member. Appreciate you. But yeah, guys, we'll see what happens. We'll see if we can find stability here, or if we continue to roll over. My bet is that the Santa Claus rally is probably done, and that we're going to roll over heading into next week. But my voice is getting hoarse too. So I'm probably going to call it, guys. I hope everybody has a great weekend and enjoy it. Again, try and enjoy some downtime and step away. But otherwise, I will see you guys Monday. And again, I'll try and get a video out for members only in regard to the TLT play. And then also I'll try and do one with walking through Michael Howell's video and talking to my ideas in regard to it, and how what I believe is right and what I believe is wrong. Honestly, I believe most of it's right. I think it's a great blueprint for next year. So anyway, Scott Healy said, I did a ton of IRA closings earlier. Just sold my Palantir at 900% gains in an IRA. Yeah, right. So the downside pressure is coming from people that have like IRAs that don't have to worry about the tax obligation until they withdraw. And again, guys, I said this before, but with Palantir, it's going to be real hard for this thing to cruise higher. Real hard. We're right at the fib level. We busted above it, got to 84. Everybody got excited. But now we're starting to roll over, and we've already seen a weekly RSI of almost 88 on Palantir. This is like, yeah. So TLH is the 10 to 20-year bond. I can pull that up real quick, but I'm willing to bet TLH doesn't have the volume that we were seeing on TLT. Here, I'll just pull it up here and not save it. TLH, 10 to 20 year. So not even a million. The average volume 30-day. It's just really, really illiquid. So I don't love personally this kind of play because of the illiquidness of it. I'd rather be in TLT. Because what does that say? 931K. And then TLT. This is the iShares. 37 million. Average 30-day. So I would personally rather be in a vehicle that has just tons of volume in it. Especially if I'm doing like $1 million, I don't want to be in something illiquid. I'd rather be in this personally. But yeah, guys, I think I'm going to call it. Not too much really going on today. We'll see if the market can hold here or if it rolls over. I think my bet of it rolling over is still good. That's why I've got 630,000-ish in cash, almost 650 now, probably something like that. Anyway, I love you guys. I will talk to you later. Peace out. Stay out of trouble. Enjoy yourself. Bye.